First up on Chartbusters today, we have Capri Global Capital in focus for a recent fundraising. The company's raised close to 2,000 crores via QIP. We have Rajesh Sharma, who's the managing director of Capri Global, joining in to discuss this and more. Mr. Sharma, thank you very much for taking the time out. If you could just start by giving us a sense in terms of the kind of investor appetite you saw for this 2,000 crore QIP and what exactly are the funds going to be used for?
Yes, thank you. So it was an overwhelming response. We got demand close to about 4,300 crore against the issue size of 2,000 crore. And there was a good demand from long-only investors likes of 3P Investment, Quant Mutual Fund, BlackRock, Allspring Global Investment, then HDFC Life Insurance, Prudential Life Insurance, Tata AIF, MK Ventures, Abacus AIF. So all kind of a domestic, foreign, and AIFs have participated. And we have closed the issue, and this money will be used for the onward lending, strengthening the capital base of the company. And this reaffirms the confidence of our existing as well as the new investor in company's business model, which is driven by technology, data science, and only in secure lending space.
Okay. All right. Hi, Mr. Sharma. Good morning. Thanks a lot for joining in here on CNBC-TV18. You're clearly pleased with the kind of response you've got to that QIP. Give us a few more details then. How much of this money will you be spending, say, on technology? How much of it you'll be spending on, with regard to getting into new geographies? As well as if I look at your book, how do you see the composition change because of your focal points? Go ahead, sir.
So our annual spend on that, we have a dedicated tech center in Gurgaon. We have about 150 engineers and about 25 data scientists working to make our processes and our decision making driven by those tools. So annually spend is in the range of about 90 crore rupees. And new geography, if we talk about, we will already present in about 1,100 branches. This year, we are going to add another 150 to 200 another branches. And our mix will remain 35% of gold, by 23, 24% MSME and micro lab, about 22% housing finance, and about 17, 18% with retail construction finance. So that will be the broad and mix looks like in going forward as well.
Okay. Just take us through what you are targeting in terms of the entire loan book growth, which has been quite strong in the past 4 years at around 4x. Just give us a sense in terms of what you're probably targeting in the next 2 fiscals when it comes to growth, and what is your sense in terms of even asset quality based on this kind of expedited loan growth that you are seeing?
So while in past we have grown very well, but going forward also from current book of 22,800 crore, we intend to grow our AUM to about 50,000 crore in next 3 years. And that will mean a growth about 30% year-on-year basis. And as regard asset quality, our asset quality, if you look at March 25, our asset quality have been in the range of about 1.5% GNP, and net NPA is about less than 1. Going forward also, we believe that we are in the business where asset quality plays an important role and collection is our backbone. Backed by our strong technology and data science capabilities, we believe that asset quality will not give any surprise and will continue to be in that range.
Okay. All right. Sir, I'm looking for 2 numbers here. One is on gold as a percentage of your AUM mix. If I look at it currently, it's a little over 30%. So there was something in the recent RBI meet for gold loans. Could you tell us how does that benefit you? And gold as a percentage of your AUM, how much will it contribute? Point number 1. Point number 2 is, since there was a repo rate cut, your cost of borrowing, I'm guessing, will come down. How do you see your NIMs shape up going ahead? So on gold loans and NIMs, please go ahead.
So gold loan currently is about 35% of the AUM, and going forward, it will range plus minus 2% here and there from this range. We intend that gold will not be over 40%, but other segment will also continue to grow. So that will be the proportion going forward as well. As regards NIM, you rightly said it. Repo rate reduction will give a abundant supply of money because now liquidity have been eased out. So that will help us to get the access to cheaper fund. Further, this capital raise will also enable us the possible rating upgrade and that will also help us to borrow at a cheaper rate. So I think going forward, our cost of fund will come down significantly. We expect at least cost of fund should come down by 50 to 60 basis. Minimum based on the rating upgrade, and further whatever MCLR reduction is getting passed on, that will get passed on further. So that benefit alone should translate in the balance sheet in long run 100 crore rupees per year kind of a cost. And if you talk about the spread, currently spread is in the range of about 6.45%. We believe that spread going forward will remain in the range of about 6.75. In that range, it will improve by 25 to 30 basis.
Okay. All right. Just a quick question with regards to the capitalization. Now that you've raised around 2,000 crores via QIP, for how long are you probably going to be capitalized?
So, till we reach a AUM of 50,000 crore rupees, we will not require any capital in our NBFC. And that is quite sufficient because about 17% kind of our book also in the co-lending. Assuming the co-lending portion even 15% also, for next 3 years, we will not require any capital, and we should be, this capital is good enough to reach AUM about 50,000 crore rupees.
Okay, all right, Mr. Sharma, we appreciate you joining in and giving us all those details. Congratulations on successful completion of the QIP, and thanks a lot for joining in and detailing how you see the company shape up in the time to come. We look forward to chatting up with you a little later.